This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, we are Bloomberg Businessweek Daily. It is the first day of May, Friday, May 1st, 2026. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. And we've got a couple records on Wall Street.
Yeah, we do. Taking a look at the S&P 500 right now, it is higher by 0.6%. 72.51, Carol Massar. The NASDAQ 100 also surging today.
Yeah, it's like nothing's going on in the world. I mean,
well, there is something going on. It's called Apple, and it was a good quarter.
You were going to go there.
Yeah, that's where I'm going.
Take it away.
Well,
yeah, it's rallying.
I don't need to take it away.
Why?
Because it is the market today.
It is.
And, you know, we're going to cover that. But I think there's also some geopolitics that's front and center that maybe investors are ignoring.
I think that's safe to say. We've had a slew of headlines. We're in the newsroom like, oh, my God. President Trump leaving the White House, getting ready to board Marine One. This was about an hour ago or so. A slew of headlines talking about issuing broad sanctions on Cuban officials and businesses. Still looking at Spirit Aviation, giving them a final proposal, maybe a decision later today or tomorrow. So I don't know. We're going to get federal assistance. And then, you know, talking a lot about Iran as well. And then tariffs, another bunch of tariffs.
Brent crude, Carol, down today by 2.6%, but still $107 a barrel. WTI above $100 a barrel at 101.25.
All right. So we're going to get more on the trade in just a moment. But as Tim and I have just kind of said, a lot coming at us again. It's not a quiet Friday, folks. We're going to get the latest on that U.S. war with Iran, more on tariffs, what's going on in terms of Cuba. Could we be getting ready to do something? I don't know. And then that possible White House bailout of airlines.
And that's just one guess.
That's just one.
Okay. We got some other people we're talking to today, including the CEO of Magna International, Swamy Kotagiri, stops by. Read on the auto sector, and we'll talk earnings as well.
Yeah, and then also stopping by to talk about life after Buffett. As Berkshire Hathaway hosting its annual shareholder meeting, that's happening tomorrow. We're going to catch up with the CEO of one of Berkshire's subsidiary companies. We're talking about Brooks Running.
Did you wear your running shoes?
Nope. Oh, I was going to show you, but I won't do that. That could get kind of messy.
It is Friday.
It is Friday. Also, Jayati Bharadwaj, TD head of FX strategy. She's going to join us too, making her way right here to our studio. In the meantime, let's get a check on the trading day. Let's turn things over to Charlie Bell.
Hi, thank you very much. You mentioned Berkshire. That stock up right now. The Class A shares up by about 0.2%. All of that coming out tomorrow morning. Right now, though, we have got the Dow, the S&P, NASDAQ pushing higher. Dow on track for a winning week. S&P also on track for another week of gains, up 41 right now, 72.50 where we stand, as Tim mentioned, up by about 0.6%. Yes, record there. Record on NASDAQ, record on the NASDAQ 100 index. We got the Russell 2000 index also in the green, pushing higher. S&P up 40, up 0.6%. The Dow just about flat on the day, still looking at a 13-point gain. We'll call that unchanged. We have got NASDAQ up 273 for NASDAQ. That's an advance now of 1.1%. NASDAQ 100 index also up by 1.1%. The VIX now just below 17 with a 10-year at 4.37%. The 2-year 3.87%. Gold little changed, up 0.1%, 46.24 the ounce, while West Texas Intermediate crude down 3.6%, still above $101 a barrel. Notice the shrinking in the spread between WTI and Brent. Brent right now 107.64. That is down by just about 2.5%. Bottom line here, we're on track for a fifth week of gains on the S&P 500 index. Some of the other headlines that Carol touched on: President Trump says the federal government is still looking at a rescue plan for Spirit Airlines and will offer a final proposal. Trump says the administration will have an announcement sometime today. Right now, looking at Spirit shares, they are trading down 22%. Earlier this morning, we did see them fall by roughly 70%. Frontier ultra low-cost carrier ULCC on the ticker, up by 9.5%. JetBlue is higher by 3.9%. And among some of the legacy carriers, United up 2.5%, American up 0.9%, Delta Airlines up now by just about 1.8%. Recapping, stocks higher, S&P at a record up 39, higher by 0.5%. Carol and Tim, that is a Bloomberg Business Flash.
All right. So appreciate it, Charlie. We'll come back to you later on this hour. There's so much going on this hour, as we've been talking about. You've got President Trump signing an executive order imposing new sanctions on Cuba. There's tariffs. We're going to get into that with our Jeff Mason in just a moment. But we want to get a view on the markets. Feel like it's the kind of right week to start there because there has been so much, Tim, coming at investors.
Yeah, it's great to have back with us Jayati Bharadwaj, head of FX strategy at TD Securities. She joins us here in the Bloomberg studio.
She does indeed. Welcome, welcome. It's good to have you back.
Thank you so much.
What a
for
week.
coming back.
I want to talk the dollar, because the dollar wrapping up its worst month since June, as the prospect of peace talks to end the war kind of leaving traders to unravel bets on the haven currency. But it does seem like a little bit different perhaps today, looking at a slightly higher dollar index. How are you strategizing around the war here? Do you think we're getting closer to an end?
Unfortunately, that's not an easy question to answer. It does appear we've reached a stalemate. I think the most likely scenario would be given on the nuclear side, both sides are still on very differing and opposing views on what needs to happen. Eventually, you are going to get close enough to midterm elections, oil reserves and capacity hitting very low levels such that oil prices start shooting higher, such that both sides will have to come up with a brokered deal for the very near term, but you cannot be sure if it remains next year. But up until the midterm elections, you can get some sort of a peace deal. Let's not talk about the nuclear part. Let's leave that for a later discussion, but agree on everything else and try to get the Strait of Hormuz open. So some sort of a midterm peace agreement seems the most likely path.
I'm sorry. It just seems like
it worries me when you say that.
It just seems like that goes back to a situation then that was worse for a lot of parties before the war began.
Yeah.
So like you're not getting rid of the nuclear threat, and oil is still higher, and Iran's leadership has been, in the words of the president, decapitated. But it also seems like the IRGC is running things. So I don't know. We're having a hard time understanding what's going on.
I think that obviously you do need to take out the nuclear threat. The debate is what's the right time to do it. Is it now when midterm elections are approaching, or do you wait for after that? Because you always have the option of troops on the ground. Do you wait for things to die down? Clearly, both sides are alerted to escalation on both sides, and you do it much later when one of the sides is not expecting it. I think that's the trade-off you need to do, and our defense and policy analyst thinks that it could get deferred until after midterm elections, any surprise troops on the ground, or, tackling the nuclear question more heads on.
I have to say, JT, I do think about this a lot, and I do wonder if at some point or slowly or right now, the administration and President Trump's advisors are saying, and he seems to be, they all remind us, he's the one who's going to decide where this goes next, but that he could potentially be thinking, let's just figure out a way to get to the midterms without upsetting anything more than it already is, right? And open up the strait. That eases gas prices. That matters to voters. We'll figure out stuff later. And then then he might be saying, listen, you want to keep it in our, you got to help us with this. To Iran.
You have a good...
You know what I mean? Put it off till next year.
Okay, I'm just going to say, the president said at 12:32, negotiations are not getting there. He said hardliners in Iran want to make a deal. The U.S. is not leaving the Hormuz Strait now.
So I think the Strait of Hormuz will be prioritized. That's the key thing for voters. That's the key thing for global economies across the world. You will potentially get to some sort of a deal where both sides have some sort of vigilance on the Strait of Hormuz, but it allows to slowly go back up to the way it was operating. It may be 70 or 80% of what it was operating at, but both sides would keep an active vigilance on it. That would be the brokered ceasefire. It would not be a full ceasefire, not a complete deal. That would be the intermediary step before you get to the final stages.
Yeah, it's like not committing. You're dating and you don't commit kind of thing. JT, stay with us. I want to just get to some of the headlines. We mentioned President Trump signed an executive order imposing new sanctions on Cuba, imposing new restrictions on entities, persons, or affiliates that support the Cuban regime's security apparatus. This increased pressure coming as President Trump told reporters that the U.S. is not close to a deal to end the war with Iran. He did speak earlier.
So they want to make a deal, but I'm not satisfied with it, so we'll see what happens. Iran wants to make a deal because they have no military left, essentially, and they want to make a deal, but I'm not satisfied with it.
Now, all of that in the same couple of hours that the president also said he was raising tariffs on cars and trucks from the European Union to 25%, claiming that the bloc had failed to fully comply with the trade agreement negotiated by the U.S. We're talking with Jayati Bharadwaj, and we also want to bring into the conversation who obviously tracks everything from Washington, usually in the nation's capitals, our own Jeff Mason, Bloomberg News Washington and White House Bureau. White House correspondent. Sorry, I'm rushing.
Close enough.
I heard you were rushing to get here.
She's just so excited that you're here.
I'm excited
Jeff,
too.
We're excited.
So we're just going to round table, you guys.
Let's do it.
It felt like you just did a dump, in terms of covering so many different things, Jeff, as he was headed to Marine One. I know. What is it that we really need to know? Jeff, me, Jayati. What do we need to know out of that?
Well, I would just say, having just heard or read a little bit about what he said about Iran, that what he's been saying about Iran is been more or less the same thing for several weeks now. I mean, the ceasefire has been in place for a while. The president is not indicating an interest in changing that, at least in part because he talks about wanting a deal, but he wants a good deal, and he said that to me in our phone interview a little over a week ago, that he didn't want to be rushed. He said that again in the Oval Office last week when I asked him, and he said, "Don't rush me, Jeff." So we know he doesn't want to be rushed, and yet he also wants a way out of this war. And it sounds like the Iranians have put forward another proposal that went through the Pakistanis. It seems to me from his comments that means he has seen it and just doesn't find it acceptable.
We don't know what they're asking, but what do you know about from the Washington side of this, Jeff, that would indicate where the president would say, okay, that is something that's acceptable to us? Does it have to do with enriching uranium?
Well, based on what he has said consistently, and let's acknowledge that not everything he says has been consistent, but one thing that he has very clearly said over and over again is that he wants this war to ensure that Iran does not end up having a nuclear weapon. So it wouldn't surprise me if uranium at some point is part of the negotiating, or on the list of things that the U.S. would want it to negotiate about. Certainly the Strait of Hormuz has been an absolute thorn in President Trump's side since the start of this war. He's going to want to have at least some clarity about that. That has created a great deal of political risk for him, in large part because Iran wasn't using the leverage it had on the Strait before the war, and now they are, and now they know they can, and it's going to be tricky for President Trump to take that away from them, and so no doubt he's going to want some sort of agreement or some sort of certainty on that, and that's going to be, that's a tough sell to the Iranians when they're the ones against whom this war was started.
I mean, JT, I want to bring you back in. I mean, we've talked about higher gas prices in the United States, but you go through other parts of the world. You see certainly a much tougher impact. They are much more reliant on what comes out in terms of oil out of the Middle East. Asian currencies, we've seen them under some pressure, whether it's the Indonesian rupiah, the Indian rupee, the Philippine peso. I mean, these are three nations' heavy reliance on imported oil. It's an interesting week where King Charles kind of schooled President Trump on cooperation and really thinking about the world at large. Tell us about, though, the impact and the pressure that you're seeing in the currency market.
Clearly, the oil importing regions have been heavily impacted, and you can see that in the performance of the Asian currencies. You could also see that in the Japanese yen, which prompted the BOJ and the MOF to intervene this week, which was a big deal and led to a big move in markets. But the Asian countries and counterparts are clearly taking the brunt of that pain and pressure. They're also the ones who are, don't have as many reserves like China does. So China and Chinese currency have been relatively shielded because they've had a very lengthy amount of reserves to hold on to while the world is dealing with this oil price shock. But the other nations that you mentioned don't have those reserves in place, which is why the higher oil prices are immediately feeding in. In fact, these countries are now also encouraging people to work from home, take public transportation. There was also talk in India at one point of shutting some restaurants down because of the high prices now impacting the economies there.
Yeah, I mean, look at it from the angle of Pakistan and why Pakistan has such a vested interest in ending this war because of the impact of high oil prices. Just for the remainder of the year, where are you optimistic? I kind of like to... We've been talking a lot about challenges to this economy, challenges to this world. Where are you optimistic?
I'm optimistic that this is the midterm election year, so you do need some good news eventually as the approval ratings start becoming stickier. Important primaries are coming up, and you need to eventually shore up support and start building and gearing up towards that.
I'm so glad you went there. Jeff, before you came in, she was talking about this. Well, exactly.
Set me up completely.
But when does do you see any actions by the president that he's really starting to really think about that?
Yeah, because of his travel. I mean, he's starting to do some political travel, which is what he had intended to do, or what the White House intended for him to do 8 weeks ago before this war started. They were about to unveil a great deal of travel to swing states, to swing districts, to places where important races for Republicans are close. And then that didn't happen because he's been presiding over a war.
Would it actually be a good thing? Do these candidates want him there?
He's still very popular with his base. He's still very popular with some Republicans. The war is not popular. You're not wrong to say that. But he is a good fundraiser. And I think at least the White House believes he has a good story to tell, not necessarily related to this war, but related to the economy and where things were before the war. Now, can you tell that story without one piece of it? That's hard. It's certainly hard when Americans are going to the gas stations and spending more than $4 a gallon on gas.
And to be fair, I mean, going back to when he came into the White House and coming off of Joe Biden, we were talking about American exceptionalism. I mean, was that fair, JT, in terms of what you saw among traders, whether it's currency markets or just kind of the conversation, the narrative about what the U.S. was prior to President Trump taking up his second term?
Yes, the U.S. economy pre-2025 was having a great run for a good amount of 2 years of being exceptionally strong. The labor market is tight. Inflation is strong from a core and demand side of things, not just as a supply side of things, which allowed the Fed to hike interest rates. The dollar was a safe haven back then, but now all of those things are being questioned and debated, which is why the economy, even before the war, was not as strong and resilient heading into it, which is also, I think, a mattress to the voters. We actually did this interesting exercise where we went back and checked all of the midterm election years where the ruling president lost either the House or the Senate. In all of those, most of those years, there was some sort of an economic issue that voters were dealing with, either high inflation, high levels of unemployment, which forced that flip to happen. So definitely voter approval and a sound economic base is very important heading into this.
Is that happening right now with gas prices? Is that enough? It's a supply shock, and we don't know how long it will go.
Yes, when you read of reports that people are now paying $6 a gallon at stations, it's going to feed into them. Already you see that excess savings for US households are negative, which is different from compared to households in Canada, UK, even EU, where people have held on to their post-pandemic savings. The US households have not, which was going to be painful for them.
Interesting. Jeff, say 40 seconds real quick. I mean, what's the most important thing that we got from the White House and the president this week? There was so much.
There was so much. I found the King speech very striking.
Me too.
As we talked about a couple of days ago, and that he really made a case for NATO. He made a case for Ukraine. He made a case for norms. The president didn't take that as criticism, but he did respond a little bit with the tariffs on whiskey. And so, who knows if that will have any other ramifications. It's not
King Charles likes whiskey, can we assume?
Maybe one could draw that conclusion.
Doesn't. No, I'm just kidding. Got to run. Thank you both so much. Jayati Bharadwaj, head of FX strategy over at TD Securities, and of course our own Jeff Mason, who covers the White House, Bloomberg News, Washington, and White House correspondent. We're back in a moment. we wanted to remind you that tomorrow investors will focus on Berkshire Hathaway's annual meeting with shareholders. It's quite an affair in the past. This year it will be the first where the highlight is not the man himself, Warren Buffett, having passed the reins now to CEO Greg Abel.
Yeah, Greg Abel in that position. He's facing a problem that seldom confronted his legendary predecessor, and that has to do with a floundering stock price. Shares have lagged the S&P 500 index by more than 37 percentage points over the past 12 months. Carol, that is the worst stretch for 1 year going back to the year 2000.
All right, so a little bit of pressure, perhaps. Yeah. It makes this year even more interesting as investors are always consumed by the Berkshire universe. It's public holdings as well as its private ones, its subsidiary companies. One of those independent subsidiaries under the Berkshire portfolio is Brooks Running, long time affiliated with Berkshire Hathaway. Joining us from the floor of the Berkshire Shareholder Conference in Omaha is Dan Sheridan. He's the CEO of Brooks Running. Dan, it is so nice to have you back with Tim and me. It's
already busy there. Look at that.
What's going on around you? Tell us.
Well, hi, Tim. Hi, Carol. Happy to join you here from Omaha. You can see behind me, we're at the shareholder trade show, and we're packed here in our booth. We're selling product here to all the shareholders and their family, and how fortunate are we to be here this weekend.
What's selling right now? Not just at the shareholder meeting. Yeah. But all around the country, and especially in China right now.
Yeah. Tim, we just finished our first quarter. We're up 23% as a company globally, and it's a broad-based growth story. All regions for Brooks are growing double-digit. You mentioned China, up 136% for us. We're really resonating with the Chinese runner. But our core business here in the U.S. grew 20%. Our European business grew 30%. And it's just an outcome of this strategy that we've been on for 25 years. Pinnacle premium performance products with great execution and a brand that continues to strengthen in the market. So I think we're just getting started, to be honest with you.
Well, give me some context and perspective, if you would, Dan, when it comes to China specifically. You mentioned sales growing 136% year over year. How much of top line is actually China right now?
Yeah, China is still a very small percentage of our business. We entered the China market in 2022, so we're a new entry into the market. But what we're seeing both online and offline is just great resonance with the Chinese runner. And the running boom that we've talked about the last few times I've been on continues to gain momentum in the China market. And we're seeing that around the world. As I said, Europe for us is just becoming a very strong engine. And it's not just footwear. Our apparel business grew 34% globally too. So we're hitting it on all fronts, and it's a global story for us.
From a marketing perspective in China, and then we'll go more global in a second, but while we're on China, I want to get some details from you on marketing there. What is the strategy, the communication strategy with the Chinese consumer? Because it comes at a time when, America is not necessarily viewed, I think many people would argue, is viewed as an adversary of China right now. So what's the brand positioning, and how do you communicate the brand to that consumer?
Yeah, it's really clear for us, Tim. Our brand positioning is simply put as we believe everyone's a runner, and our jobs are to awaken aliveness in every runner through the transformative power of the run. And what we know based on how we've expanded is that resonates with the Chinese consumer. It's matched with incredible performance products that are merchandised and colored in a way where they can wear it off the run and on the run. And our brand seems to resonate really well with that consumer. So the mix of marketing is pretty similar by country. And China is a bit more online than some of our other markets. But ultimately, our brand is expressed the same way, and the consumer is receiving it really well.
I have to say, Dan, I actually bought some sneakers this week. I'm not going to say what sneakers I bought. I'm just going to be a little quiet. But what's interesting is I am not a runner. I do other things, but I've never been a runner. But it's just, you go into one of these stores and everybody's buying sneakers. That's what they want to walk around in. That's what they want to live in. That's what they want to wear to work. I see it here. Is that really the growth? I mean, you guys have such a great running shoe, and we know runners love it. But is that continuing to be also a strong dynamic that fuels top and bottom line?
Yeah, I mean, trends come and go, right? Mm-hmm. And right now, performance is a trend that we're rooted in. but also the casualization of the workforce and how we show up to work in casual footwear is benefiting Brooks as well. And that's why design matters matched with this performance angle. And you can see the beauty in our product as well as the technical benefits. So we're benefiting from that trend, Carol, for sure.
I'm just going to tell you, Elizabeth, one of our producers and managers, she says, I have their nylon plated line. So she is a big user.
Well,
we have some
Hyperion.
But it does speak to loyalty.
Yeah.
Totally. And we've talked about this in the past with you, Dan, this idea that once a runner finds a pair of shoes that they like, they stick with it. That's good news and bad news for companies that produce this stuff, because they need to make sure they continue to satisfy that person who wants that brand or model, but you also want to innovate. And when you innovate, you have to get rid of, of different lines of shoes. How do you make sure that the person who's loyal to a certain shoe will get that next version of the shoe when you innovate on it?
Yeah, Tim, you're on it. This is the puzzle we have to solve every single year. We have to retain customers that love our products, and we have to innovate for new customers to come into our brand. And we've been able to do that. 25 years of 14% compounded annual growth rate. That comes from understanding the biomechanics of human motion and making sure that when you buy a Brooks, that you are in a safe product and a performant product. We do that every single season. And then you have to match it with innovation in materials, both in the upper and the midsole. And right now in our space, we've got 3 styles that are winning around the world: the Glycerin, the Ghost, and the Adrenaline. These are massive styles. They're in the top 10 here in the US and the top 10 in Europe as well. So it's a franchise style model, but it's retention and attaining new customers that is our mission.
Hey, remind us and the audience, Dan, about the supply chain and how that's going. We kicked off our hour talking about the president imposing, I think, 25% tariffs on EU autos. But stuff continues to come out of Washington. That certainly impacts things. The war, the cost of things, customers paying more for gasoline here in the United States and around the globe. Any of that kind of a follow through for you guys, and you feeling an impact?
Yeah, I think the last time we spoke, we really felt like we knew where we were heading in terms of tariffs and the impact on our supply chain. Now, obviously, we have some other disruption in the Iran war. And, we're taking the same approach. We're trying to be very thoughtful in how we manage through price increases to the consumer. We've been very thoughtful in that. And, we're hopeful that this will resolve in the next couple months if we can get resolution. We believe the balance of this year will smooth out for us. But, it's another disruption to supply chains, and supply chains hate disruption, as you know.
What if it's not resolved in the next couple of months?
Yeah, so we're working on scenarios right now, Tim. I'd tell you that the framework we have is, we will have cost increases on raw materials in our products. So we're starting to model that out. And we'll probably have cost increases on moving our product from the manufacturing sites to the ports and to the markets. And so it's a dynamic time for us. And, the worst thing, again, for supply chains is this disruption and unpredictability in what we can plan for. But our team's really good at it. And we've been able to weather some of these disruptions over the last few years.
Well, how do you quantify it? Is it worse than tariffs? Is it worse than COVID disruption? What is it? Where does it fall with what we've seen over the last few years?
I think it's still to be determined, to be honest with you. I think there's just so many unknowns on what the inputs into the raw materials will be at an oil-based level. And so I would say that it's not any better than those two. It's probably on par.
Yeah, that
on par with those disruptions. Those were huge and are huge, I think, for continuing with tariffs.
Any sign of consumer weakness? It sounds like you guys are doing really well, but any signs that the consumer is hesitating or pulling back?
Yeah, not in our category. Here's what we know about the run category historically. It's pretty resilient. It's durable. And if you think about it in comparison to other sports or categories, this is a pretty affordable sport. For $150, you can buy a pair of running shoes, and those will last you for some people up to 6 months. You compare that to golf or skiing or any outdoor sport, it's still a very affordable sport. So our consumers during times of economic disruption are pretty durable and stick with it and may trade out some other things, but they'll buy running shoes and apparel.
Hey, one thing we wanted to dig a little deeper into too is apparel, your collaboration with Disney, Paris Fashion Week. We've got
casualization, Carol.
I know.
That's what he said.
Yeah. I love it. Just go where you want.
Yeah, look, what we have built this brand on is partnerships. Partnerships with some of the best retailers around the world, partnerships in manufacturing. And on the marketing side, we're really leaning into partnerships where we can attach our brand to some of the most epic brands in the world. Disney is super unique, as you know, and we sponsor their race series. I was in Orlando 2 weeks ago running the 5K Springtime Surprise. It was great. And we also are matching that, pushing into a lifestyle brand, our brand in the lifestyle category. So there's dimensions of your brand as you build your marketing mix. And we think we've got a recipe right now that's going to invite more people into this brand.
Hey, just 20 seconds real quick, Dan. Going to be a little bit of a different meeting this year around.
It really is. I'm excited. First time in 60 years that Warren's not going to be on the stage. And what a time for Greg to step in. I have so much confidence in his leadership and the leadership of the Berkshire board, and we're just thrilled to be here. And as you can see, there's a lot of people behind me that are thrilled to be here.
All right. Well, we were thrilled to have you here, Dan. Good luck this weekend. Have fun. Dan Sheridan, CEO of Brooks Running, joining us from Omaha and that shareholder meeting, the Berkshire meeting. We're going to stick with earnings. We've got another conversation from the C-suite, and this has to do with Magna International. It's an auto parts retailer. You know that. Company out with the earnings. Stock selling off at one point down nearly 10% at its intraday low today after cutting its sales forecast for the full year. Evercore ISI out saying that given the run-up of shares into the print, the stock was up nearly 20% prior to today's earnings. Evercore ISI said there was a somewhat elevated bar for Magna, and that the stock saw a big first quarter EBIT and margin beat that did not flow through to the full year outlook. This according to the analyst over at ISI, Chris McNally. Magna, these are his words, was generally expected to have a solid first quarter and focus was all on the guide, he said.
With more, we're joined by Swamy Kotagiri, the CEO of Magna International. He joins us from Troy, Michigan. Swamy, it's always good to have you on the program. We're going to get to the quarter into earnings, but I want to just start with some news that we heard from the president. Just a little earlier today, the U.S. is set to hike a tariff rate on EU auto imports to 25%. This coming from the president just a little earlier today. What does that do for Magna International?
Yeah, we've been dealing with trade policies and tariffs over the last 1 year. As you know, Tim and Carol, we have a footprint in Europe and other parts of the world. The important thing is, in most of the places where we are present, we are aligned with the OEM and we produced systems and components and supplied to them locally. So really not much travels across ocean for us. So it's going to be how the strategy of the OEM changes, not as much an effect for us. And mostly, in most of the cases, the OEM is the recorder, importer, they're responsible for it.
So Swamy, in this case, this news doesn't, in other words, doesn't have any effect on your company, nothing material.
Not the first order effects, obviously. As vehicles start having a different price point and different hurdles as they come across, there might be an effect on the demand of the vehicles, but not directly to Magna.
One thing I want to ask you, as of early 2026, average transaction price for a new car in the U.S. officially exceeded $50,000, with Bloomberg reporting a record of roughly a little bit above that. And I'm just, we're buying bigger vehicles, EVs are more expensive. How does that at all impact your business?
Yeah, Carol, that's a great question. The DNA of the Magna, especially the auto industry, but more so for Magna, is continuous improvement. We call it operational excellence. We go through this improvement process year over year, and that is the reason why we have been able to post such good results even in the first quarter, where we expanded margins, generated solid cash flow, and reaffirmed our full year outlook. and that is nothing but execution despite the softer production environment. So we have to continue that process and do little by little. We call it inches make champions. Mm-hmm. And, we look for every penny everywhere in the organization.
One thing that we're trying to get a good handle on, Swamy, and we're going to be speaking to some other CEOs in our 3 and 4 o'clock hour, is what the consumer looks like, not just in the United States, but around the world, and how that behavior has changed with gas prices moving higher. What can you tell us, just what you're hearing from OEMs right now, and really what you're seeing as far as your product moving?
Yeah, I think, as you know, Tim, we have a broad portfolio, so we have the chance to have those strategic discussions with the OEMs. From a consumer perspective, affordability is definitely, top of the list. From a consumer preference, they're looking at different features in terms of safety, comfort, and convenience. That is what is defined as the software-defined vehicle or the smart car, whatever name you want to give it. There is a balance now of how to get all of this into platforms so that you can still get the features that the consumers in the market demands, but in a way that is economical, and that you can get by scale, right? And that is where we at Magna talk about modularity and scalability, so you can engineer once and deploy it many times. And that is the thing, over the last few years, there has been a significant change in trends. It's been EV, it's been autonomous, it's, a whole bunch of things changing, connectivity. So we're seeing the confluence that we've never seen before. Now the question is, how do you prioritize so that you can give the consumer what they want and still keep it affordable?
Yeah, I think about the factors right now, Swamy, coming at car buyers, right? Higher gas prices, cars just expensive. You see this flat production environment globally, particularly on the back of those rising gasoline prices. So I'm just curious, you mentioned, really squeezing out costs. Is that the strategy? That's how you guys navigate through all of this to keep the business where you want it to be?
Carol, you bring up a good point. One of the things that you have to remain flexible and be resilient. We work in an industry that has long cycles. It used to be 4 years and 3 years. Now we're talking about 2 years, but still a long cycle. So in other words, what you're producing today has been designed at least 2 or 3 years before, right? Yeah. So you have no option but to think of scalable and be resilient so you can react and be agile about it. And from a design perspective, that's where I talk about modularity and scalability. The trends are changing. So you can't say, I designed this and that's all it's going to be. You look at our powertrain, we are addressing EVs, we are addressing hybrids, we are addressing ICE vehicles. As the trend changed, for example, in North America from EVs, pulled back a little, and now we are starting to see a significant trend in hybrids. The portfolio was set in such a way that doesn't matter which way it goes, we can lever up the particular module scale and get back to the market. So on the design aspect, that's how we are looking at it. We have to do the same thing in assembly lines and process. If the volumes go up and down in demand, we have to be able to react to it. Mm-hmm. And on top of that is what I said, you got to look at every penny across the organization. So it's a combination of all of this to stay competitive in the market. We have about a minute left, Swamy. In this environment, we're seeing higher commodity costs with oil still above $100 a barrel. We talk, of course, about higher gas prices, but then the second order derivatives that come from that when it comes to refining and refined products. Just in 30 seconds, how does that affect your business? Yeah, some of the pressures that we see, obviously, now with what's happening in the Middle East is energy, freight, and certain input costs like resins, right? The playbook is the same. First order is mitigate operationally as much as you can. Then you work through commercial recovery mechanisms that are in place over time. And you need to do this, collaboratively with the customers. Yeah, it's just such a wacky environment. I just think about, higher gasoline prices. So, your regular combustion engine cars, that feeds into that. Power prices are up, though. So I've heard people say, I've got an EV, but
what it costs now to charge. Like, it's just, there's a lot coming at the customer, but also those who are in the auto sector, and it just doesn't end. Swamy, you always find time for us. Thank you so much. Tim and I really appreciate it.
Thank you.
That is Swamy Kotagiri. He is, of course, the CEO of Magna International, joining us there from Michigan.
Coming up next on Bloomberg Businessweek Daily, stocks on the move, where the S&P 500 on a day up 0.4%.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading on this Friday, May 1st, first trading day of the month of May, and we're also getting ready. We just wrapped up a month of trading as well, the month of April, which was very interesting in terms of the equity trade. Having said that, on this Friday, S&P 500 near its lows of the session, still up about 26 points, a gain of about 0.3 of a percentage point. You've got the NASDAQ 100 outperformance there, 237 points to the upside, and it's up, Tim, almost 0.9 of a percentage point.
I'm just doing some quick calculations on the Bloomberg terminal to kind of take us back to yesterday, Carol, and what we saw. Best month for April for the S&P 500 since November of 2020. That was when the index moved up by 11%. And I think, if my memory serves me right,
I'm listening,
that we might have gotten some positive news on vaccines that month.
Oh gosh, yeah, right?
Yeah, on the mRNA vaccines.
S&P 500 for the month of April, I know Romaine went through these numbers yesterday, up 10%. Flip it on over to the NASDAQ 100. Sorry, I just got to do this because I'm just like kind of blown away by the bounce back, up 15%. And then I think if you go to the Russell, oops, sorry. There we go. Is that right? Nope, that's not right. Hey.
Dun, 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 dun.
We're making the sausage.
This is the final Jeopardy.
The Russell 2000 was up 12%.
Okay.
All in.
There we go.
All in.
See, I just try to do one thing at a time.
Wow.
So then,
welcome to being a woman, because we do more than one thing at a time.
I have no good segue for that. I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Isabelle Lee. Hey, Isabelle.
Hey, Tim. While
Welcome.
you guys were chit-chatting, I was also sending you my stories as self-promotion because women multitask, to Carol's point. Anyway, you're outnumbered. So let's talk about Chevron. Ticker is CBX. The stock is down by nearly 1.5%, 1.8%. They reported first quarter results that analysts see as messy. So they had large paper losses from commodity prices, but adjusted EPS beat on downstream strength. So we have BMO saying that this was better than expected. Even as U.S. and international production fell, RBC said results are solid. And as we know, surging energy prices, of course, boosted earnings. It offset a $400 million blow from the war-related production outages. So earnings dropped to a 5-year low, but at least the figure included the impact of a temporary accounting charges. So
I'm kind of scratching my head.
Yeah, it's a little bit confusing. Exxon also reported recently.
So so they're not benefiting from higher oil prices? I don't know.
They're benefiting from higher oil prices, and
but other stuff was at play.
Yes.
Okay. Sorry to be, I don't know, weird.
No, questions are good.
They are. Let's go to, I love this ticker, Riot Platforms.
Riot Platforms. I know they really won on the ticker game because the company is Riot. The ticker is Riot, R-I-O-T. So cool. Stock is surging, up 7%. They reported first quarter total revenue that beat estimates. We know that AMD expanded its data center lease with a company, so that was a big booster. So Cantor Fitzgerald said that they see it as a positive that this quarter included data center hosting revenue. And KBW said that the earnings beat on higher than expected revenue and profit. And that's as Riot began to get data center revenue also from AMD. And AMD lease was also expanded. So really, that's a huge tailwind for them.
Yeah, so they're still doing Bitcoin mining, or they're mostly doing digital infrastructure now. I don't know.
I think it's a bit of both. Yeah. I mean, a lot of these companies are pivoting. I was in Las Vegas for the Bitcoin conference. I'm just repeating it so the company really gets its money's worth for sending me there. And a lot of people were talking about AI. There were a lot of mining booths, but AI and how it's disrupting mining was definitely one of the main conversations.
What was the overall tone?
The overall tone was exuberance, honestly. No one talked about price. It was all we're here for the long haul. And a lot of people said Bitcoin to 1 million. Eric Trump said that. Michael Saylor said 10 million. And for a while I thought, my gosh, maybe I'm missing something.
Well, I mean, those two own a lot of Bitcoin.
Of course. Talk in their book. But it's interesting. I think that shift to data and AI in particular, I find that fascinating.
And quantum risks. But Tim will talk more about that on his show on Tuesday.
Oh.
Maybe you'll be there too.
Maybe. Maybe.
Wait.
Okay.
Hey, are you guys planning something?
Anyway.
All right.
Anyway, let's move on.
I feel completely left out. So,
did you fly Spirit Airlines?
No, I flew.
Okay.
Flew, right?
Flew. It's okay.
United. But Spirit, I love the ticker. It's FLYQ, FLYYQ. Stock is down, though, 16%. They paired an earlier drop, but as we all know, President Trump said that he delivered a final proposal to rescue the carrier, but would only proceed if it's a good deal for the U.S. This really made headlines, and it kind of shocked me when I saw the headlines because, I mean, it's an airline.
I mean, that ticker, why it's so interesting is it's now over the counter, right? I mean, because the stock has been taking or has taken such a beating. But you bring this up, right? This whole idea of a bailout.
Yeah, they're making preparations to wind down their liquidity position as it really just worsens. And the prospect of a bailout is kind of dimming.
President Trump said either later today or tomorrow. He's thinking about it. I think he put out a proposal. But I think he also said he didn't necessarily love the idea.
I don't know. For me, all airlines these days are expensive. Flights are expensive.
Everything's
stay
expensive.
Put.
I know.
Gas is expensive.
So appreciate you. Isabelle Lee, Bloomberg News cross-asset reporter. Yes, she does multitasking really well. Check out our Stock Movers podcast. 5-minute episodes. Find it on Apple, Spotify, or anywhere you get your podcasts. Watching on TV, the close coming your way. Stick with us on Bloomberg Businessweek Daily.